Hi guys. This video is the problems in chapter 14. We'll do problem 14-2b. First, it is on page 565. What they've given us is a list of costs, and they've asked us to categorize these costs in one of 5 categories. We have 3 categories that are considered product cost, and we have 2 categories that are considered period costs. So our product costs, direct materials, direct labor, and factory overhead. And our 2 period costs are selling expense and general administrative expenses. So I'm going to go through the list and categorize them. Advertising expense fits in the selling expense category. Let's do capitals. Depreciation on office equipment. Office is general administrative. Depreciation on selling equipment. That's a selling expense. Depreciation on factory. Anytime you hear factory, it's going to be a product cost. In this case, it's factory overhead, which is where depreciation fits, as does factory supervision, factory supplies, factory utilities, all fit in the overhead category. Direct labor, of course, is going to go in direct labor. Indirect labor is a factory overhead item. Miscellaneous production costs. Production means factory. Office salaries. That is an administrative expense under general. It's a period cost. Raw materials is direct materials. Then we have rent on the office. That will be an administrative expense. Rent selling, that's a selling expense. Rent on the factory is a factory overhead item. Let me go back up and freeze this so that it will keep the titles. Freeze panes. There we go. We're almost done. We've got maintenance expense on the factory is going to be an overhead item, and sales salaries goes as a selling expense. So when I shrink this down, this is the completed schedule. Anything that is directly on the product is going to be a direct material. Anything that involves people putting together the product, having their hands on the product, is going to be direct labor. And then factory overhead is everything else that relates to the factory or the production process. Selling is all about sales and advertising, and general administrative is everything that is not a product cost, that doesn't fall in the category of selling. Okay, let's move on. This is problem 14.3b. 14.3b. In 14.3b, we're going to be preparing 3 requirements. The first is a schedule of cost of goods manufactured. This is where we show the flow through of the costs. Then we'll go to an income statement where this manufacturing statement plugs into, and then they've asked us to prepare some calculations after that. So the first one we need is a heading. This is best bikes schedule of cost of goods manufactured. And this is for the year ended December 31. Did they give us a year in the book? (2019). We're going to start with beginning inventory, $40,375. It's at the top, so we're going to use a $sign. The raw materials purchased were $894,375. If we add them together, we're going to get raw materials available, what we had at the beginning plus what we bought. But we're going to subtract out the ending raw materials inventory because those are still sitting in the raw materials warehouse. So that means the raw materials that we used are going to be $864,320. So we've taken what was there at the beginning plus what we bought minus what was there at the end. Direct labor is $562,500. And then we have our factory overhead items. So let me go back up here and freeze the panes. And I'll make this a little smaller so it's a little easier to see. But I'm going to freeze things up here. And we have our factory overhead items. Depreciation, $35,400. Factory supervision, $121,500. Supplies used, $6,060. Factory utilities, $37,500. Indirect labor, $59,000. Miscellaneous production, $84,440. Rent expense on the factory, $93,500. And factory maintenance is $30,375. When I total up all of those overhead items, and I'm going to use the sum key, my favorite thing, adds them all up, $391,775. So when we add together our three manufacturing costs, which is the direct materials used, the direct labor, and the factory overhead. Those are our three period costs. It gives us total manufacturing costs of $1,818,595. That's what went in on the debit side of the work in process account, where we already had $12,500 sitting there from last month. So what was there at the beginning plus what we put in there in terms of direct materials, direct labor, and factory overhead, minus the work in process at the end of the period. That's what didn't get finished. That's going to tell us the stuff that did get finished. It was manufactured and transferred into the finished goods warehouse, and this cost was debited to the finished goods general ledger account and will show up on the income statement. So I'll shrink this up so you can see the whole thing. There's our schedule of cost of goods manufactured. Requirement 2 is to continue that on for an income statement. Now we can prepare the income statement. I've got my heading here. I linked my date to the statement of manufacture, cost of goods manufacturing. I'll do it again. So equals the year ended December 31, and that will just come right over. Then we're going to start with sales, 4942625 with a $sign. Beginning finished goods inventory is 177,200. We're going to link that to our manufacturing statement for cost of goods manufactured. So that means that the goods available, which is what we had at the beginning, plus what we manufactured during the period, is 1,994,195. I'm going to subtract ending inventory because we want cost of goods sold. And in order to get cost of goods sold, I want to subtract the cost I didn't sell. And I didn't sell them because they're still sitting in the finished goods warehouse. So when I subtract cost of goods sold from sales, I get a gross profit of $3,090,180. Gross profit. And now we have our selling expenses. We have advertising, $20,250. Depreciation, $10,125. Rent, $27,000. Sales salaries, $295,300. Total selling expense, $352,675. Administrative expenses, we have depreciation, $84,440. Office salaries, $70,875. Rent expense, $23,625. So my total administrative is $102,940, which means that total operating expense, which is the selling plus the administrative, is $455,615. If I subtract that from gross profit, I'll get income before tax, $2,634,565. I'm going to subtract $136,700 for income tax expense. That's pretty small income tax expense for making over $2.5 million, but these are the facts they gave us. So net income is $2,497,865. And here is what the whole income statement looks like. And we can move on to requirement 3. Requirement 3, they're asking us to drop in these columns raw materials and finished goods. So the cost of raw materials used was $864,320. Cost of goods sold from the income statement was $1,852,445 right off the income statement. We had beginning inventory of raw materials of $43,375. We had ending inventory of $70,430. So total beginning and ending inventory is $110, and we're going to get an average. So I'm going to divide that by 2, 55,403. Get rid of those decimal points. So the turnover ratio is going to be cost of goods sold divided by the average inventory. So in this case, it's the $864,320 divided by 55,403. That tells us how many times inventory is going to turn over during the year. We can do the same thing here, but now we're talking about finished goods. 177,200 was beginning inventory. 141,750 was ending inventory. We add them together and then divide by 2. That tells us average inventory was 159,475. So if I divide that into cost of goods sold, it tells me my finished goods inventory turns over 11.6 times. That's about once a month. Raw materials is a little faster than once a month. And as we learned in chapter 13, when we do days sales and inventory, we only use the ending inventory. So, and I have got that formula down here. Let me make this a little smaller so you can see. We're taking ending inventory divided by cost of goods sold times 365. So if I start with the equal sign and take ending inventory divided by, in this case, cost of raw materials used times 365, I get 29.7 days. That's about once a month. But you can see ending inventory is higher than beginning. That's why the turnover ratio was better than 30 days. But because inventory was higher at the end of the year, it went up. And with the finished goods, I'm going to take ending inventory, 141,750, divided by cost of goods sold times 365. That's 27.9 days. 27.9 days. This tells the reader how quickly the company is liquidating their inventory. So if I shrink it, you can see the whole schedule, and there it is. So the last problem we're going to do is 14-5B. I've pre-built a template here, or a form, using just lines and rows and columns and a little text box. But this is comparing a schedule of cost of goods sold of a merchandising business with a manufacturing business. And the merchandising business is called T-Mart. And we'll call this a schedule of cost of goods sold. And this is for the year ended December 31, 2019. We had beginning merchandise inventory of 100 grand. This is right out of your book. By the way, this is on page 566. Our merchandise purchased is 250,000, which gives us goods available for sale of 350,000 minus the ending inventory. That's what we did not sell. And so we have cost of goods sold of 200,000. That inventory number is pretty high for cost of goods available of only 350,000 for the whole year. But that's the information they gave us. So that's what we're going to do. And I guess technically T-Mart should have a capital M, so I'll change that. And over here we have the AIM Labs. This is a schedule of cost of goods sold. Again, and I can just link, because it's still for the year ended December 31, even though it's a different company, we're just comparing. beginning inventory was 300,000. This is finished goods inventory. We made 586,000 during the year. So our goods available is 886,000. Ending finished goods inventory 200,000. So cost of goods sold is $686,000. Easy peasy, Japanesey. So that's the problems from chapter 14. Chapter 14 is fairly straightforward, but it's just laying the groundwork for future chapters that we will dig into in more detail. So that's it for now. Thanks for watching. I'll see you soon.